Sticking with the malls, your next guest says there is a mega mall merger that could be in jeopardy. Let's bring in Roy Behren of Westchester Capital Management. Roy, great to have you with us.
Hello, Melissa. Thanks for having me.
And we're talking about Simon Taubman, which is what Karen had brought up just minutes before. What do you foresee with this deal? Because we haven't gotten any updates from the companies, either through filings or on earnings calls.
No, that's true. And in fact, David Simon on his call was asked several times what the status is. Can you give us an update? He said, I can't talk about it. People said, why can't you talk about it? He wouldn't comment either. I think it's because it's an evolving situation. The mall sector in particular has been affected by the pandemic and the crisis that we've had and the economic turndown, particularly with the doors closed. And as you saw from the last mall company you were just talking about, but the malls are starting to open up. And the one thing I would say about the Taubman deal is that the merger agreement is extremely tight. You discussed Tiffany's last night as having a very tight merger agreement. But the Taubman deal specifically mentioned, since it was announced after the beginning of the year this year, that any pandemic is not grounds for terminating the agreement. So, and including the results of the pandemic, that was referred to in the material adverse change clause, which typically governs the grounds under which parties can terminate the transaction. So it carved out the effects of the pandemic from the material adverse change. It looks like it's very, very tight. Not to mention that David Simon has been basically chasing down Taubman for I've heard as long as 15 years right now. It's a very strategic transaction. It's a great fit. He's wanted to buy them forever, and the merger agreement is super tight.
So it's tight, meaning that the deal gets done. Does it mean also that the deal gets done on the pre-agreed upon price?
That's unclear because there are often some other conditions or covenants that are involved as well regarding leverage, regarding the ability of the target company to draw down debt that may involve a change in the way that the companies typically operate. So the merger agreements are a legal contract. They try to protect the parties' rights and define the obligations of the parties as well as possible. But two people can look at an agreement and see two different things. That's why, I got a research piece from UBS this morning about the Tiffany deal, for example. It was 11 pages long, and the first page, 3/4 of it was content. The other 10.5 pages were legal disclaimers. And there's probably would still be no agreement as to what even that means. So, although everybody thinks the agreement is tight, sometimes they are subject to interpretation, but also sometimes the companies will just settle to avoid long, drawn-out litigation. Litigation can be expensive and very damaging to companies' operations.
It's Karen, let me ask you something. I agree, settlement is definitely an option here, but let's say things really unravel. What do you think the downside is of Taubman stock?
I think it depends on how quickly things open. People have spoken about Taubman. The deal is for $52. People have spoken of downside of Taubman as possibly single digits. It really depends on by the way, these clauses, material adverse change clauses, have been held in court that the effect of the downturns and these effects from the events such as pandemics and natural disasters have to be durationally significant in order to be considered a material adverse change. So it's unclear whether or not a mall closing down all of its operations for 2 or 3 months would be considered a MAC for that purpose anyway, even if there's an extreme downturn in their financial results. But having said that, the research I've seen is that if this continues for a long time, the downside could be single digits, but certainly would be below $20.
Roy, great to speak with you. Thanks for your time.
Thank you very much.
Roy Behren of Westchester Capital. Karen, how'd you trade this today?
I don't own any Taubman, but I did. The discussion last night about Tiffany got me sort of reminiscing about being a risk arbitrageur, and I actually bought some Tiffany today. I think that it's now a $22 spread, $20 spread to the upside. I don't know what to the downside, maybe $40 or so. But I think the likelihood of either a negotiated deal for less than $135 or $135 are the most likely outcomes.
I want to be an arbitrageur when I grow up, right, Guy?
Can't spell it, so it'd be hard for me to be
nice.
one.
It's a nice
I like
word.
to do things that I can spell.
I love the laugh track.